Imagine, like, walking into your local coffee shop. You step up to the counter, order your usual $3 drip coffee, and the barista just looks at you deadpan and says, "That'll be $35."
Matt, you'd probably assume it was a terrible joke or maybe like a glitch in the point of sale system or something.
Right, exactly. But when you ask them to explain, they tell you a tech billionaire just bought up 40% of the world's coffee beans to fuel a private, closed-door server farm. And suddenly, your quiet little morning routine is just, well, it's collateral damage in a global corporate arms race.
Which is a shockingly perfect parallel for what is quietly happening to the consumer electronics market right now. Except, the precious resource isn't coffee beans, it's memory.
Exactly. We are looking at a sprawling, unfolding crisis in the tech world today. We brought a huge stack of sources to the table for this one. We've got recent tech industry reports, some really deep-in-the-weeds market analyses from TrendForce and Digitimes, and a comprehensive Wikipedia breakdown.
That's a lot of data to sift through.
It is, yeah. But our mission for this deep dive is to unpack the 2025 to present global memory supply shortage. People in the industry are actually calling it Ramageddon, or the Rampocalypse, which I kind of love.
The names are dramatic, but the situation honestly warrants it.
Totally. We are going to figure out exactly how the artificial intelligence boom is silently making every single piece of consumer technology vastly more expensive and incredibly hard to find. And I want to be upfront with you, the listener, whether you are planning to buy a new laptop for work, maybe upgrade your smartphone, or even purchase a modern car, this hidden supply chain crisis is directly targeting your wallet.
It really is hitting everyone.
Yeah, okay, let's unpack this, because my first thought is that we've been here before, right? How is this shortage fundamentally different from that pandemic-era chip shortage we all suffered through from, 2020 to 2023?
Well, the distinction is entirely about intent. I mean, think back to the COVID-19 shortage. That was a global accident. It was driven by chaotic disruptions, unexpected factory lockdowns, logistical nightmares at shipping ports.
Yeah, the ship stuck off the coast for weeks.
Exactly. And a completely unpredicted spike in people buying electronics to work from home. It was basically a failure of the system to operate normally. But what we are experiencing now is completely different.
Okay, how so?
This current crisis is driven by the intentional reallocation of manufacturing capacity by the semiconductor industry. They are purposefully pivoting away from consumer memory. They want to chase the incredibly lucrative AI data center demand.
Oh, wow.
Yeah, so they aren't failing to make chips. They are deliberately choosing to make them for someone else.
Wait, I'm a bit confused here. Memory is memory, right? If the AI companies need RAM to run their models, and I need RAM for my laptop, why can't companies like Samsung just, keep making both?
That is the logical assumption for sure, but it ignores the physical reality of what the AI companies are actually buying. They aren't buying standard memory. They're buying something called high bandwidth memory, or HBM.
Okay, high bandwidth memory.
Right. Standard consumer memory, like the DDR4 or DDR5 DRAM, that acts as the short-term working memory in your computer. That stuff is relatively straightforward to stamp out on a silicon wafer. HBM, on the other hand, is a completely different beast.
How different? What makes it so hard to make?
It is incredibly complex.
Yeah.
Basically involves stacking multiple memory chips vertically on top of one another. And to make them communicate, they use something called through-silicon vias.
Through-silicon vias? Okay, what exactly is that doing?
Think of them like microscopic elevator shafts. The manufacturers literally drill down through the vertically stacked chips and run wires through those shafts so data can travel up and down at lightning speed.
That sounds crazy expensive to do.
It is, and because of this structural complexity and the sheer physical size of these stacked chips, HBM requires significantly more raw wafer capacity per bit than standard DRAM.
Ah, I see. So to make a single HBM chip, you essentially have to sacrifice the physical factory space that could have produced multiple standard consumer chips.
Precisely. Manufacturers only have a finite number of silicon wafers they can process in a given month. So as they dedicate more of those raw wafers to these complex HBM stacks, they're actively stripping capacity away from conventional DDR4 and DDR5 modules.
Wow.
And the scale of this AI demand is just staggering. Let's look at OpenAI. By October 2025, they signed letters of intent with Samsung and SK Hynix for what they're calling their Stargate project.
Right, I saw that in the sources.
Yeah, and that single initiative is projected to consume up to 40% of the entire global DRAM output, We are talking about requiring roughly 900,000 wafers every single month just to build out one company's AI infrastructure.
40% of the global output for
Yeah.
one project. That leaves everyone else on Earth fighting over the remaining 60%.
Yes, and it gets tighter because this is all happening against the backdrop of severe geopolitical constraints.
Eh.
Throughout 2025, we saw escalating U.S.-China trade tensions, new tariff structures, and fears of regulatory backlash.
Right, the tech Cold War, basically.
Exactly. And this caused companies like Samsung and SK Hynix to halt sales of their older manufacturing equipment to Chinese entities. So right when global demand is spiking to unprecedented levels, the overall global production capacity is essentially capped.
Because they can't get rid of the old stuff to make room for the new stuff.
Yes, if they can't offload old machines, they struggle to make room for new ones. And competitors in China can't spool up their own production to meet the overflow because they can't get the equipment.
So you have capped global supply, and then AI companies just sweep in. It's like every construction company in the world suddenly stopped building affordable housing because a few billionaires handed them blank checks to only build luxury skyscrapers. It leaves regular home buyers, or in this case PC consumers, just fighting over the scraps.
What's fascinating here is the nature of those blank checks. Tech giants like Google, Amazon, Microsoft, and Meta aren't just placing large orders. They have placed open-ended orders.
Wait, open-ended, like just keep making it and we'll keep buying it?
Literally, yes. They have essentially told memory suppliers that they will take as much HBM supply as can physically be produced, regardless of the cost. When you have buyers with trillion-dollar market caps offering to pay whatever it takes, consumer electronics companies simply cannot compete for factory time.
That is terrifying. We are talking about trillion-dollar giants fighting over this supply. But what happens to the regular companies trying to build the consumer electronics we buy every day? I mean, if almost half the world's memory is going to OpenAI, the math has to catch up with us eventually.
And it has.
Yeah. Looking at the sources, the numbers are brutal. Standard GM prices rose by a staggering 172% throughout 2025 alone. Some total outcomes show 200 to 400% price increases across both DRAM and NAND flash memory.
And let's quickly define that second term because it's crucial. We mentioned DRAM is the temporary working memory of a computer. NAND flash is the permanent storage. It's what makes up the solid-state drive where your files and operating system actually live.
Right, so both your RAM and your hard drive, basically.
Exactly. Both are getting hammered. And those skyrocketing costs are slamming directly into the profit margins of PC manufacturers. This isn't, a slow, manageable transition. It is a violent shock to their business models.
Look at HP. In a single quarter, they revealed that their memory costs jumped from making up 15 to 18% of their PC build materials to an unprecedented 35%.
Which is huge for hardware margins.
Oh, absolutely.
Yep.
Lenovo's CFO even went on record describing the surge as something they had never seen before. They were so spooked, they started hoarding memory inventory at 50% above their normal levels just to protect themselves from future price hikes.
And that hoarding behavior is a textbook example of the bullwhip effect in supply chains. When major players like Lenovo panic buy and stockpile components, they send a false demand signal to the suppliers.
Oh, because the suppliers think everyone needs even more than they actually do.
Exactly. It drains the remaining liquidity from the supply chain. The suppliers see this frantic buying, assume demand is even higher than it is, and they raise prices further.
Yeah.
That panics other buyers into doing the exact same thing, which just accelerates the crisis for everyone.
And we are absolutely seeing those prices hit the consumer at the retail level. I mean, Apple was forced to announce immediate price hikes on iPads, Macs, and the Vision Pro in June 2026.
And the market did not like that.
No, that move actually caused a 6% drop in their stock because investors know higher prices mean fewer sales. Over in Tokyo's famous Akihabara district, retailers had to physically ration memory sales to prevent local consumers from hoarding parts.
Rationing PC parts. It's wild.
It really is. Valve had to delay its second Steam machine all the way to June 2026. And when it finally dropped, they were forced to price it at $1,049. That is 75% more than a PlayStation 5. Gartner is even projecting that entry-level laptops like the kind under $500 that students rely on will become financially unviable to manufacture within 2 years.
The low end of the market is just evaporating.
But wait, let me play devil's advocate here for a second. If memory is so expensive and driving up prices across the entire board, how do we explain Sony? Because they actually reduced the price of the PlayStation 5 by $100 for Black Friday 2025.
That is a really great observation, and it highlights a fascinating divergence in corporate strategy during a supply chain crisis.
Mm.
See, PC makers like HP or Lenovo make their money almost entirely on the hardware itself.
Right.
If their internal components cost more, they have to pass that cost on to you, or they go bankrupt.
Hmm.
But platform holders like Sony operate in a completely different paradigm. Their console is essentially a Trojan horse to get you into their digital ecosystem.
Ah, so they make it back on the games.
Exactly. They are willing to absorb colossal hardware losses, essentially eating that exorbitant memory cost themselves to maintain their market share. They need to keep players engaged to stimulate long-term software and subscription sales.
So it's a calculated loss.
Yeah, but this strategy doesn't mean memory is cheap. It actually proves how desperate the market has become. Sony is bleeding money on every piece of plastic they sell just to keep players in their walled garden, hoping to make the money back over a 5-year software lifecycle.
Okay, so the current situation for consumer hardware is deeply painful, whether companies are passing the cost to us or eating it themselves. Which leads to the obvious question, right? When does this end? The sources look forward to 2027 to see if relief is on the horizon, but they paint a terrifying picture. The future is already sold out.
It is entirely booked. Industry insiders are reporting that DRAM and HBM capacity for the entirety of 2027 has already been fully claimed by major buyers. TrendForce data indicates that HBM and AI servers will eat up nearly 70% of all DRAM capacity.
70%, that is unreal.
And it is not just DRAM. NAND flash capacity for 2027 is expected to be fully reserved by late August 2026. Heavyweights like Samsung, Micron, and SanDisk are completely sold out for a year that hasn't even started yet.
This sounds tough for a behemoth like HP, but I imagine it's an absolute bloodbath for the smaller, independent companies. Our sources highlight a company called Apacer.
Yes, Apacer is a great example of the downstream pain.
Right, and for context, Apacer is an independent module maker. They don't bake the raw silicon wafers themselves. They buy the finished chips from companies like SK Hynix and package them into the RAM sticks you actually plug into a motherboard.
Right.
The CEO of Apacer issued a dire warning. He expects the DRAM chip supply provided to independent module makers could drop by over 70% year-on-year in 2027.
And a 70% drop in your core raw material is an existential threat to an independent business. You can't just tighten your belt. You have to deploy radical survival tactics.
Radical is the word. Apacer intentionally swelled their inventory to $383 million. That is a 48% jump in a single quarter. And to afford that, they had to take out a $124 million syndicated loan.
It's this massive gamble.
Just think about the panic that implies. They are taking on 9 figures of debt from multiple banks just to buy chips the very second manufacturers make them available. Their CEO essentially said their biggest fear isn't overpaying, it's getting zero supply and having to shut their doors entirely.
Yeah, when the alternative's going out of business, you pay whatever they ask.
Exactly. And if you were hoping the Chinese manufacturers like CXMT or YMPC will swoop in with cheap alternatives to save the day, don't hold your breath. Their domestic demand inside China already wildly exceeds what they can produce, and their module prices are tracking right alongside the big 3 global manufacturers anyway.
There's no relief valve there.
No, none. But this raises a fundamental economic question for me. If these massive chip foundries know demand is this historically high, and they are completely sold out through 2027, why don't they just build more factories right now to capitalize on it? I mean, surely they want more money, right?
Right. If we connect this to the bigger picture, you run into the severe physical limitations of semiconductor scaling. You cannot just flip a switch to make more memory, and you certainly can't build a cutting-edge fabrication plant, a fab, overnight.
Right, it's not like opening a new fast food franchise.
Not at all. Building a new fab takes years of planning, billions of dollars, and incredibly complex engineering. For instance, Micron broke ground on a $9.3 billion fab in July 2026. But it will not start actual production until the third quarter of 2028.
That's a 2-year lag, minimum.
At best. You are strictly bound by construction schedules and, more importantly, equipment bottlenecks. Take extreme ultraviolet lithography machines or EUV machines.
EUV machines, yeah.
Yeah, these are highly specialized, multi-million-dollar pieces of equipment required to essentially print the microscopic circuits onto the chips. They are back-ordered globally. And then you have raw material shortages.
Like what kind of materials?
Well, let's look at glass cloth. It is a high-performance substrate that is absolutely crucial for modern semiconductor manufacturing. A single Japanese firm, Nitto Boseki, holds an overwhelming monopoly on it, and they simply cannot scale up to meet the current demand.
A single firm.
Yes. So even if you have $10 billion lying around to build a factory, you might not be able to get the machines to print the chips or the materials to run the machines. The supply chain is incredibly fragile.
So we are staring down the barrel of a bleak hardware outlook stretching well into 2028. But our sources do point to a fascinating divergence that might offer a silver lining. I mean, are we just stuck waiting years for concrete to dry on new physical factories, or is there a way out of this?
There are two potential pressure release valves here. The first is a divergence in the memory market itself. TrendForce predicts that while DRAM, that temporary working memory, will remain incredibly tight through 2027, the market for NAND flash, the permanent storage memory, might actually ease up in the second half of 2027.
Oh, really? Why is that?
This is because new capacity for NAND is coming online faster, and consumer demand for basic storage remains weak. So, we might see the storage market shift back toward an equilibrium, even while RAM remains super scarce.
And companies are already using that to their advantage, right? They are taking high-capacity enterprise SSDs, which use that cheaper NAND flash to offload colder, less active AI workloads from the wildly expensive DRAM.
Right, it's a clever hardware workaround.
But the real wild card here is software. In March 2026, Google announced a technology called TurboQuant. It is a memory compression technology specifically designed for large language models, and the claims are phenomenal. It achieves 6 times lower memory consumption and an 8-fold performance enhancement.
The impact of that announcement really cannot be overstated. When you compress an AI model to run on 1/6 of the memory footprint, you instantly destroy a substantial chunk of the projected future demand for physical memory hardware.
Here's where it gets really interesting, because I was trying to wrap my head around how software magically shrinks physical data. I read up on it, and it uses a technique called quantization.
Right.
It's like Marie Kondo for data. Instead of storing a highly detailed, incredibly precise 4K photograph of a blueprint to build a house, TurboQuant figures out you only need a basic pencil sketch to get the exact same job done.
That's a great way to put it.
Yeah, it literally throws away the microscopic decimal points to save space without losing the core information. It's a revolutionary vacuum seal bag for AI models. It shrunk the footprint so drastically that the warehouse owners actually panicked.
Exactly. The market recognized this breakthrough immediately. Following the TurboQuant announcement, memory makers like Micron, Western Digital, and Seagate actually saw their stock prices decline.
Oh, wow.
Yeah, the spot price of consumer DDR5 memory temporarily dropped by nearly 30%. This raises an important question about the fundamental nature of the tech industry. Hardware and software exist in a constant push and pull relationship.
How do you mean?
Well, when hardware is cheap and plentiful, software developers get lazy. Code becomes bloated because memory is abundant, so who cares, right? But when you hit a physical or economic wall, like a 400% increase in RAM prices, the industry is forced to innovate on the software side.
Necessity is the mother of invention.
Exactly. TurboQuant proves that when brute forcing a problem with physical hardware becomes too expensive, human ingenuity will find a path through software efficiency. It might be the only short-term savior we have in this crisis.
So to summarize the journey we've been on today, the explosion of generative AI has triggered an intentional, monumental shift by semiconductor manufacturers. They are dropping consumer memory to chase highly profitable HBM.
Correct.
This has violently squeezed the consumer market, skyrocketing prices by hundreds of percent. It's forcing PC makers into panic buying, which creates a bullwhip effect, pushing up the price of your gadgets and entirely booking out global factory capacity through 2027.
It's like a perfect storm.
Yeah, and while software innovations like TurboQuant and a potential easing in the NAND storage market offer a glimmer of hope, the Ramageddon is fundamentally reshaping the tech landscape for you, the consumer. So what does this all mean for you?
That's the big question.
If you've been waiting for laptop or phone prices to drop before you upgrade, you might be waiting until 2028. This deep dive shows exactly why holding on to your current devices or buying what you need right now before prices hike again might be the smartest move you can make.
Before we close, there is one final piece of the puzzle tucked into the sources that we really must consider. It frames this entire crisis in a much darker light.
Oh, what's that?
There is currently an antitrust class action lawsuit filed against the big three, Samsung, SK Hynix, and Micron. The lawsuit alleges that these companies are actively conspiring to manipulate the market through price fixing.
Wait, really? Price fixing?
Yes. It forces us to ask a difficult question. Are these memory giants truly overwhelmed by genuine AI demand, Or are they using the AI boom and the transition to HBM as a highly convenient, perfectly timed pretext to artificially choke supply, kill off legacy products like DDR3, and keep their profit margins at record highs?
Man, it really makes you wonder, if you walk back into that coffee shop tomorrow and the barista tells you the coffee is still $35, are they really out of beans, or do they just realize they could finally get away with charging you that much? Think about it.